present about basic accounting concept. Firstly, I would like to I have choose 5 concepts, which is separate entity, money measurement, methodology concept, consistency concept, and the historical cost. So first one is separate entity. Separate entity is mean business and business owner. Two separate entity, which is the transaction which is doing by business owner personally not will be included in business transaction. Example, but as a floor which has 3 halls for around 150,000 per month rent, and then he uses 2 hall for purpose of business and then one for his own personal use. So from this situation we can see that there is the business transaction is the expenses is only for the 2 hall which is purpose for the business activity only. So the 1 hall for his personal use is not will be included in his business expenses. So the second concept is money measurement. Money measurement is record only those items which can be expressed in money terms, which is example, we only record money terms like it's have to be ringgit form amount, and they have cost and value for that item. So example, when I record the value of inventory in ringgit Malaysia, and this valuation clearly represent the worth of this item within the financial statement. If you see in our business activity, we will not using the if the company buying flour means, like the bakery company buying the flour means, they will not record as kg or gram like that. They will record by the amount which is paid for that inventory, which will be the flour and then sugar. They will record by its amount of cost which is they paid for that in item or inventory. So the third one is materiality concept. Materiality concept is record only those items which can influence in decision. Example, expenses of 50 cents, the other 50 cents might not be substantial enough for huge banks company with a high net income, but an asset or expenses costing 5,000 is large enough to classify as an asset or an expenses. If expenses like 50 cents, it could be razor or 1 pencil like that. Maybe it can be parking. So it's not a might be a transaction which is can affect that company decision or company board member decision. But the asset he going to buy with a huge amount. It can be machine, it can be plant, it can be factory. So this will be classified as an asset or expenses which is can influence in the decision of the business. The fourth one is consistency concept. Consistency concept is business as decided on a particular method for treating an accounting item. So example, banks choose straight line method for depreciation of asset every period accounting of the business. So bank will be used that straight line method for whole period, and then the next period, the following period, he will be using the continuously the straight line method. He won't be jump to another method, and then another year he will do another method like that. So he will be using the straight line method. Like same goes to the inventory management also, like FIFA and then FIFA will be the example. So the last one is historical cost. So historical cost are the price paid for an asset to purchase when it was purchased. So historical is the purchasing price of the item or the asset. So example, Ben has purchased factory at 200,000 means 2 million will be it will be reported at the value in the balance sheet under historical costs, even though it was 500,000 at the current market price. Even though its market price now is 500,000, but in the historical cost will be 200,000, will be recorded as 200,000. So that's all from me. Thank you.